Hello everyone, welcome back to theCUBE. We are here for the special CUBE pod, I guess. Dave, I'm John Furrier, your host with Dave Vellante, here at the NYSE, New York Stock Exchange. CUBE East is our new location on the East Coast. CUBE East, called a super node. It's a super point of presence, a super pop. Dave, great to be back here. Again, 2025, we're going to be ramping up a lot of content here.
Our first time together in our NYSE studio.
Yeah, not too shabby. Great setup here. But really the action in 2025, off to a fever pitch with Trump, president-elect, soon to be sworn in as president. And then, just clearly the tech scene is driving a lot of action. You're seeing Elon Musk roll. I mean, he went all in on the election. He burned the boats, as we say, to get Trump elected and buying Twitter for $65 billion. Great ROI for Elon, this richest man in the world every day. Tesla stocks up, SpaceX. I think we call that a lost leader deal with Twitter, now X. But X, actually, a lot of right-wing action on there, but it's a news outlet. The news people are still on there. So, this political tech scene is, in my career, I've never seen tech so influential in government and policy. Tech has traditionally been an outlier influencer, mostly kind of not really savvy on the politics scene, but they usually would hire firms, policy managers, and and essentially, that's kind of the deal. What was now tech with the TikTok ban just recently yesterday, and the chips ban and embargo. You're seeing a lot more influence. A lot more first-party kind of relationships being developed, and what you see now is the first time we've ever seen in our lifetime tech leaders driving government. Now, if you remember when we were covering the AWS Jedi post that I wrote and uncovered the campaign against Amazon with the $10 billion contract, I did extensive analysis and reporting. My big takeaway was in the DC scene was that why are all these lawyers making all of these decisions? Where's the tech savvy? And the groundswell of the younger generation was clearly anti-lawyer, idiot business person, tech wannabe politician. Well, now it's like, if you're not tech savvy, you're out.
Well, there's a palpable shift in public policy going on, isn't there? I mean, you had, obviously Elon aligned with Trump early on. Now you got all the rest of the tech bros aligning with Trump. Tim Cook, you got Zuck, firms are donating to the inauguration. You got Bezos, to your point. You remember Trump basically shifted the balance for Jedi toward Microsoft, so you got that going. The other thing is, you got Lena Khan out, you got Gary Gensler out, so you got the sort of anti-M&A and anti-crypto person, two of those people, those regulators, out. Now, whether or not the new administration is going to be anti that, but look, I mean, these tech CEOs, they're smart. They know if you align against Trump, you might pay the price.
They're not dumbasses, Dave. They are with the ball. Look at Zuckerberg kissing the ring.
So why wouldn't you align with him? It's just smart business, and I think that's what's driving this. You've also got tariffs looming. You got you mentioned the CHIPS Act. The small little news item the other day, but I think it's significant, is the Taiwanese government, I don't know if you saw this, is now allowing TSM, the world's single best manufacturer of advanced semiconductors, to manufacture 2-nanometer chips outside of Taiwan. Prior to this announcement, they were restricted of only doing the most advanced semiconductor manufacturing inside of Taiwan. So that's interesting because it's a hedge on China. Yeah. It's an alignment with the new administration coming in, so they could be in line for more CHIPS Act money. And I will make a prediction right now. I think it opens up the door even further for Intel to spin out its foundry.
Yeah, and also don't forget that there's been a lot of talk about Taiwan being invaded by China, so that's also another opportunity to kind of divest the risk of China invasion of Taiwan. No one likes to talk about that, but that's the public secret everyone's talking about. They saw what happened with Hong Kong. Taiwan clearly is significant in its presence in chips. And again, AI infrastructure is going to be a big thing. And some people are saying that there's tech headwinds. I don't see it that way. I think there's some headwinds that could be temporary. I mean, look at the LA fires with those Santa Ana winds. If we see tech headwinds that look like that are going to ignite, destruction of wealth creation, you're going to see it in chips. And I think this is why I'm really nervous about the Biden thing is that, and NVIDIA's, screaming at the top of their lungs, this is going to hurt competition. If there's a political maneuver, you will see a headwind like a Santa Ana winds with LA, just burning up wealth. And I think once the government starts putting their finger on the scales, you're going to see problems. And I think, clearly, the Taiwan as a political entity, geography, all that goes with that, water, manufacturing. If they don't get something up and running outside of Taiwan, then that could cause some supply chain problems. Well, and again, demand and supply chain, two major factors that we're going to see in this next 24 months of how NVIDIA and others will do. And if you look at NVIDIA's stock price, if there's $1 trillion shifting, which you had put out a post with the research team that said that there's $1 trillion in shift right now in the data center and connected cloud business, that demand, if that dries up, that's going to put huge pressure on NVIDIA. And their stock could plummet.
So, tech wins. Let's analyze that and see what the data says. So, first of all, we've seen a lot of these waves, and when these waves occur, you always have this what I call out with the old, in with the new. And so you have this, the old stuff declines, the new stuff's not big enough yet to offset those declines, so it creates some confusion in the market. But I mean, there are headwinds in the sense that, during COVID, the IT spending, it was growing at 7-8%, 9% a year, and as the Fed's starting to tighten, that went down to the low single digits, 2.5%. Now, it's better. 2023 was maybe 3.5%. 2024 was maybe 4%. 2025 maybe be 5%. So it's sort of slowly ticking up. But see, what you had here is half the customers tell us that their spending on Gen AI is stealing from other budgets. So it's not like it's incremental. So that is a form of a headwind. I think the second factor is, people are sort of uncertain about the ROI, so they're being cautious. The flip side of that is, on the other side of the barbell, you got $200 billion in CapEx spending going on. I think NVIDIA, ironically, is going to hit $200 billion in revenue. They're probably consensus for 2026, their fiscal 26 is 170, 180 billion. I think they're going to hit 200 billion. Kind of ironic that that's the same number of the CapEx. They're not obviously not getting the CapEx. The other thing, you mentioned that post that we did. The data center market is probably, if you do all in, hardware, all the gear, networking, storage, compute, data center infrastructure, power, cooling, all in is probably around $300 billion. NVIDIA, in just a couple of short years, has gone from low single digits, mid-single digits, 5, 6, 7, 8%. It's got 25% of that spend now. And we think it's going to hold that 25% for the next 10 years. And so you're talking about a market that is today a few hundred billion, and it's going to grow to well over $1 trillion, 1.2, 1.7, even mid next decade could be closer to 2 trillion, John.
Yeah, and I think that analysis is right on. And first of all, they might even grow that. So you're, being conservative by saying hold. But if the shift happens, the $1 trillion shift, you mentioned stealing from other budgets. When you look at the growth of data and the growth of AI capabilities, it's growing faster than the actual IT budget increases. So that means it's got to come from somewhere. Where's that money going to come from? It's going to come from other projects. That's the shift we're talking about. We're talking about pre-existing buys and budgets plus expansionary growth on the budget. So if you look at the growth rates of data growth, data AI, and AI growth with agentic, those growth rates are significantly higher than the budget increases. So Dave, just do the math. Yep. Where's it going to come from? So it's going to come from the, I call old school IT spend. Servers, networking, and storage, and it's going to go to the new architecture. We had Renan on from Vast Data. They have more money in the bank right now than what they've raised. Their revenue growth is phenomenal. They probably will go public here at the NYSE, or go public at some point, or even stay private and do like a Databricks round and just get more cash. But they are so funded because they're the new architecture. This is what's going to happen. NVIDIA has proven that they can go from single-digit share, niche player, quote niche player, to the leader replacing Intel on the S&P 500, and what Intel was as a bellwether, as a stalwart, whatever you want to call what Intel was in the PC revolution. We are now going through a supercomputing revolution, and NVIDIA is the horse to catch. clearly they're way ahead of the pack and everyone's in their rearview mirror. So if the demand continues with data and AI growth, that budget has to shift there. That's the $1 trillion on the table. If they can keep their 25 and grow to say 35, then the stock price justifies it. And Dan Ives is right. Again, he called it earlier. We've been calling it earlier as well. We had that, from what, 5, 6, 7 years ago, we had their percentage increasing. So again, these are the scales right now. And if the thumb on the scales is on demand continues, and there's no regulation headwind, NVIDIA flies. That's why they're going crazy right now on the whole Biden ban, because you look at NVIDIA's statements, they're like, it's anti-competitive. That's code words for bad move for them. Wow. So, a lot of things are up in the air right now that could hurt NVIDIA's revenue and stock price ultimately, and that's going to come down to demand and then supply chain. Both of those variables are highly sensitive to these headwinds, and or they could be artificial headwinds. I mean, we don't need to go in and regulate 18 allies, say you have to buy from us. I mean, and then all kinds of licenses. I mean, it's red tape. Okay, we don't want red tape, in my opinion. Now, you can put the curb on China. That's a whole different ballgame. And the Taiwan thing, very, very relevant. So,
I think NVIDIA and other semiconductor manufacturers' reaction to that, in a sense, is playing into what we were talking about earlier on the public policy. I think if they vehemently oppose it, that sends a signal to the new incoming Trump administration that this is what President Biden is doing is bad. So what you should do is do the opposite. And that's what we often see when these new administrations come in. It's like, this previous administration did this, we're going to do the opposite. And so I think part of that was to shine a light on it. The other thing I would state, when you talk about the disruptions in the stack, every layer of the stack, you mentioned obviously NVIDIA, but every layer of the stack is now going to be transformed. Compute, move into clustered systems, something you've talked about a lot. Networking, very ultra low latency networking. Storage, distributed file systems, you had Renan on from VAST. That's something that they talk about a lot. And then even the software stack, operating systems that become AI optimized and AI aware. The data stack, we've talked about that a lot. How you're harmonizing data, dealing with governance, the application stack, all these agent frameworks, injected into the application stack. So every part of the stack is becoming AI optimized, and that's huge disruptions to the old guard, the old way.
Yeah, and again, this points out why that this inflection point, this supercomputing revolution, is an AI infrastructure game. And if you look at the winners and losers, there will be many losers in this next wave, right? The famous quote from Pat Gelsinger, former Intel CEO, former CUBE alumni, if you're not out in front of that next wave, you're driftwood, meaning you're going to get pummeled by the big wave. What he means by that is that if you don't actually hit it right, we're talking about Dell, HPE, HP, PCs and servers. If they're not on the right side of this, okay, on this data center shift, they could lose out, right? NVIDIA is enabling new architectures. That's why companies like VAST are emerging. VAST came out of nowhere. They launched on theCUBE 2 years ago when they came out. Renan saw the wave and he was inspired by Google, Jeff Dean, and said, I'm going to build this for this next deep learning wave. And they purpose-built that architecture. It's a new architecture. So for them, that's the key. And that's where I see this world coming. You're going to see new brands emerge out of nowhere, rocket ship up, and just pop into the market, and at the expense of the incumbents who don't move fast enough.
So, as you well know, John, all the action is happening in the hyperscalers. The big 3 US hyperscalers will comprise $200 billion in revenue this year, and that's growing at 20%, and a lot of that is because of AI, as you well know, and they've got the flywheel going. But I'll say this, when you mention Dell and HPE and Lenovo, the core system vendors and the infrastructure players, I think they have between 12 and 18 months to figure out the gaps that they have in their portfolio so that they can compete more effectively with the hyperscalers on-prem. Because basically what you have happening now is much of their demand is going to these sort of neo clouds, like the CoreWeaves and these alternative GPU clouds. Or it's going into, in the case of Dell, it's going into, Memphis for Elon's, 200,000 GPU cluster AI machine. And their supercomputer, if you call it that. But that's not the typical enterprise. When you think about down here in New York City, the banks, the insurance companies, the NYSE and exchanges and the like, they don't want to necessarily put everything in the cloud, but The cloud's alluring because it's got all the tools.
Yeah,
It's got
yeah.
the data. It's got the databases. It's got the partnerships like Databricks and Snowflake. It's got that flywheel. It's got all the security, cloud security companies. So the on-prem players have, I think, a window, maybe it's 12 to 18 months to prove that they can, A, create a cloud-like experience, that operating model, which I think they can do, but they also have to have the tooling and that AI capability, that surrounding ecosystem that at least is good enough and can match to a certain extent the cloud, or else we're going to see the same thing that happened before. The cloud is going to accelerate.
And again, companies like Dell, we've been very positive on Dell, but also do a little bit of a critical analysis on Dell, Dave, is that their AI factory positioning is phenomenal. They copied that from NVIDIA last year at GTC when Jensen said we're the AI factory, and then Michael Dell jumped on that because it is such a good positioning for Dell because it kind of speaks to the Dell brand, what they've been selling into the IT departments and enterprises. Dell is the gold standard in the enterprise. They own that. IBM, another brand that has great standing in the enterprise. Okay, but here's the problem. The opportunity on the shift is significant, this $1 trillion shift to the data center. I call data center and connected cloud because we're talking about cloud operations. It's cloud, data center, edge, all one thing, but still data center investments are coming on the shift because of the AI on-prem. It's proprietary and intellectual property. Okay, notwithstanding that little nuance. What's going on right now, if you look at the top companies, Vast Data, you mentioned them. You look at AWS Cloud. Look at DDN. DDN just got funded by Blackstone. They called it an AI data company. Of course, they don't really need the money, but they're going to grow and be a generational relevant company. And they could go public. Alex is going to be on this program tomorrow. We'll talk to him again. But again, you're clearly seeing that DDN, Vast Data, these players are serving. These are enterprise solutions. So what's happening? We look at where the money is going. If you follow the money, it's large-scale hyperclouds, AWS. Put Meta in there because I think they're going to take some rents. We're going to get to that in a second. But AWS, Microsoft, Oracle, Google Cloud, all these guys are going to make some serious bank. Then you got the neo clouds. You mentioned the neo clouds. These are the GPU clouds, CoreWeave, Tensor Waves of the world.
Genesis.
You're going to see these specialized, large-scale systems clouds doing massive compute storage and networking that are purpose-built for use cases for customers. And then you're going to see the rise of what I call scaled enterprises. JP Morgan Chase. These are the enterprises that have huge IT budgets and look and walk and quack like the enterprise. Hyperscalers. So JP Morgan Chase and Capital Ones of the world, they are, in my opinion, they're very cloud. They're very large scale. You're starting to see a new category of companies that are operating at such scale. They have a unique perspective. We call it rarefied air. They're operating at scale. They can introduce new products with AI that will have the kind of scale that an AWS will have. So in the enterprise specifically, you're going to see these large enterprises leverage that investment and become hyperscalers themselves just by pure gravity. So if that happens, and that's where the money's going to. You look at Vast, DDN, they're selling to the large scale enterprises. Call X a hyperscaler because they're going to have large scale AI. Elon's going to have tons of GPUs in there. He's already got them with his AI, so XAI will be one of those. Meta will be in that category. That's where the money is. Okay, now the enterprise side, that's where Dell and these guys were selling to. So they have an opportunity to get in there, and the window is about 24 months. If they don't have 12 months of position, they could be driftwood. Okay, so this is a interesting dynamic in the market, and it's going to come down to how fast the AI practical solutions roll out, how the AI infrastructure rolls out, and again, it's a whole nother architecture. This is not yesterday's architecture.
You said follow the money, and I'll add to that, and to use that metaphor, follow the data. Because, to your point, JP Morgan Chase has petabytes of data on-prem. These large companies, they're massive, and they don't want to necessarily, they want to use that data as a competitive advantage. So they don't necessarily want to put it in the cloud, but they will if they have to.
Yeah.
In other words, if those on-prem players like Dell, like HPE, like Lenovo can't prove that they can create that similar experience, and the proof points, in my view, aren't there today. That Elon is doing it because he's got that capability. The neo clouds are doing it because they got a lot of really good solid people. Yeah. But are those enterprises in that position? Not that they don't have great people, but they are starting just now to really understand how they can leverage what they've experimented with in the cloud, on-prem, and it'll be interesting to see how fast, you gave it 24 months, I was saying 12 to 18,
Well,
somewhere
12
in
to
there.
8 means the markers will be laid down in 12 months. So if you're Dell and you're a big systems player, if you don't have that up and running, you're going to be looking at maybe a bad year the following year. The markers will be laid down in the next 12 months, and you can start to see the spend. You know, the JP Morgan Chases, these enterprises that are on top of cloud, the Capital One, JP Morgan Chase, these are the companies we're talking about. AWS and Google and these clouds are enabling scale for these enterprises who then become hyperscalers and industry neo clouds, Dave. So what CoreWeave is doing for GPUs, I can see JP Morgan Chase being a neo cloud for the entire vertical they're in. So I think we talked about this like maybe 4 years ago on theCUBE at reInvent. We said, hey, you know, why wouldn't Capital One serve the entire industry, the people who were malnourished, if you will, in IT? Because if you're like in that same category and you don't have that scale, you have two choices: build it or buy it, or you're out of business. So if I'm in the vertical, I might have a relationship with the quote leader neo cloud that might be specialized in the industry. So industry verticals, you were hearing it with retail this week for NRF, you're hearing it in healthcare. There's going to be players in those categories that will rise up to the top and walk and quack like a duck, which is the hyperscaler.
So
and you know, if I'm in those businesses, I'm like, hey, I could actually expand my TAM and go down market in my own industry.
So here's the opportunity for the Dells of the world. If they can prove this, if they can get out the proof points, this could be a huge tailwind for them, because about 15% of the customers that we talk to with our partner ETR are telling us that they actually are repatriating workloads. Now, it's not an enormous, it's a small portion of the workloads, but nonetheless, there's a rebalancing going on, and there has been, John, for the last couple of years, as we know. I mean, coming out of COVID, everybody went to the cloud in COVID, but then there was that sort of rebalancing, and so I think people really have done a good job, customers, of getting their sort of on-prem operating model act together. And the vendors have been very supportive of that. It took a long time, but now they're there. So if they can prove that they can build that ecosystem around AI across compute, storage, networking, and very importantly, the software stack, that's the missing piece today, all those surrounding tools. But if they can build that out with the ecosystem in the next 12 to 18 months, this could be a huge tailwind for them.
Yeah, and just one final point before we wrap is on the geopolitical headwinds. On the semi-ban, obviously that's the big discussion. And you got the Chinese officials talking to Elon about maybe doing X buyout, which by the way, I predicted on the CUBE pod, if you remember many pods ago, that Elon was posturing X to basically take over for TikTok. Looks like that actually might happen. Hence all the new features and AI coming in.
Well, he's got good relationships with China.
He was hedging to be the replacement for TikTok. So now you have essentially a quasi-US play against China. Again, total 3D chess game going on with China and the US and Elon. Okay, put that aside. If you look at the tech market, geopolitical, Wall Street Journal reported this morning that the signs outside the United States from a funding standpoint are strong. For example, Israel seeing a funding increase for the first time, a 28% increase. This is in tech startups, and we had the feature here on the NYSE, the cyber starts came over. Israel is really hot on defense tech. So cybersecurity and then just overall entrepreneurship in Israel is booming. And they're fighting a war at the same time. So that is amazing data. So if you look at Israel's data, that to me is a tell sign that entrepreneurship in AI will be a global phenomenon. It's going to be a global opportunity, and anything that kind of forecloses that, like BS regulation, any kind of government involvement. So if you are in the EU, or you're in London, you're in the UK, and you're outside the United States, if you don't look at Israel and look at that use case, okay, you're not going to have the innovation, okay? Israel has been aggressively entrepreneurial for many decades, and even in the prism of war, it's still up. So, you know, if I'm the EU, I got to look at that, and I got to say, we have to kind of maybe change how we do things and get more entrepreneurial. So again, great news coming out of Israel. The startup ecosystem is thriving. Obviously cybersecurity, big tailwind there, Dave. And defense tech. I mean, you want to talk about defense tech and drones and Iron Dome. I mean, they're good at it. I mean, we've interviewed many on theCUBE here from Israel startups, and they know their tech. So that's huge news.
Yeah, and we had that cyber week here with all the cyber AI innovators, which was amazing. And I think there were probably 20 or 30 Israeli-based startups here that were incubated. And when they get incubated, it's not like a couple $100,000. You're talking about $5 to $8 million seed rounds right? So they're serious, and I think you're seeing a change of sort of attitude. Israeli companies typically have not gotten to IPO, and now you're seeing several. Example of Sneak, we had Peter McKay on before. Basically, Israeli-based company, but U.S. persona, and a number of them want to go public, and I think, I'm really excited about that. Wiz is another one, and that, probably has an IPO in its future, and so that really is a different sort of approach from Israeli companies, which typically just, built innovation and then sold to a larger company.
Well, great chatting with you, Dave, and it's awesome here as we kick off day 2.